Timeframes. One of the key parts of trading, something that can decide if you make money or lose it. The truth is, most traders still struggle with them. Some start on 5-minute chart, others jump to the 1 day time frame, and both end up confused. There are many videos on YouTube about this topic, but most are too long and complicated. You watch, you wait, and still don't get a clear answer. So that's why I made this short video, just the important parts, explained simply, plus the strategy I use myself. So let's keep it simple and short. Let's move on.
So, what is time frames? Basically, they show how price moves over different periods of time, like a week, a day, or just a few minutes. They let you zoom in and out of the same market. When you zoom out, you see the bigger direction. When you zoom in, you see the smaller details. And remember, no single time frame tells the full story. And to trade with confidence, you need to understand how they work together. Now, let's look at this on the chart. Alright, let's make clear this for a second and switch to the weekly time frame. So now on the weekly or even daily, it doesn't matter right now actually, you can clearly see the overall trend of the price. And this is where the bigger direction of the market becomes visible. And one important thing to remember, especially if you are new, is this. One candle represents the full time period you are on. For example, on the weekly chart, one candle equals one full week of price movement. On the daily chart, one candle equals 1 day. And the same rule applies to every time frame. Now, if we drop to the 3-minute time frame, it's actually so small, you see that focus changes. Here, you are no longer looking at the overall direction, you are focusing on the short-term movement and timing. So, as you can see, different time frames serve different purposes. But this is where most traders make mistakes. It's not about using time frames, it's about the order you use them in. Let's talk about why the order of the time frames matters. So, if you start from the wrong place, for example, jumping straight into 3-minute or 5-minute chart, you might catch noise instead of the real direction. And the lower time frame can look attractive, but without context, it's misleading. When you use the core sequence, you understand the bigger picture first, and only then focus on your entry. So you can take a look at the structure or sequence, and you should definitely memorize it for your future analysis. This structure gives you clarity, confidence, and better decisions. And honestly, the way you move through timeframes can be the difference between a winning trade and a losing one. So right now, let me show you the concept and the real example. Alright, before we begin, quick clarification for beginners. Short means price going down, long means price going up. So let's start with the concept. Imagine we are on 4-hour time frame and the overall trend is short. So price has been moving down for a while, lower highs, lower lows, and now inside this move, price makes a small move up. Let me highlight this area. So for example here. So this local upward movement, if you zoom in, will look like a 5-minute chart. So let me draw another one. So it's gonna look like something like that. So, and on that 5-minute time frame, it can look strong. So let me clarify better. So it will be 4-hour, it will be 5 minutes. 5 minutes. So I hope it's better. So on a 5-minute time frame, it can look strong. And this is where many beginners get confused. If you start analyzing directly from 5-minute chart, you'll see price rising, and naturally, you'll start looking for long trades. But the bigger structure is still bearish. So what happens? You enter long, so you're trying to find the position, so you're entering long, and shortly after, price actually drops. Why? Because you traded against the higher time frame direction. And here is one of the most important rules in trading. Don't go against the overall trend. When the higher time frame, like we did over here, is moving in one direction, fighting against higher time frames usually doesn't end well. Let's look at the real example. And let me find a good one for you. And I think it should be something something recent. And actually, here's a great one. But firstly, let me point out this fair value gap over here. So we'll use it later as a potential target area. Let me turn on replay mode over here and switch to the 3-minute chart. Yeah. So, perfect. We are in a role of the beginner in trading right now. Let's watch and analyze. So, let's up here. So currently we are on Asian session right now. We see that price sweeps a lot of liquidity. First one was over here. Second one was over here. And third one was over here. So pretty huge liquidity pool, and also we gave some reaction over here, and price started to move down. And focusing more on this part, based on the local structure, you decide to enter a short trade. So you enter approximately somewhere over here, stop goes above the recent high, and take profit is placed before the fair value gap we pointed out before. So overall, everything looks clean. The setup, I think, makes sense. And let's watch what will happen. So yeah, everything is fine right now. We are in profit. So what will happen? So suddenly, what happened? You get stopped out. And what happens when we zoom out to the higher time frames, such as 4 hours? We can clearly see that the structure of the price was actually in long context. So it was moving up all the time. But you entered short against the global trend. And this is exactly why the order of analysis matters. If you don't start from the higher time frames first, you can easily take trades that look good locally, but are completely wrong in the bigger picture. So the real question becomes, what is the correct order to follow? And let's break that down.
Alright guys, the most important thing you need to remember is this. Just whenever you analyze the market, you should always move from a higher time frame, step by step, all the way down to a smaller one. And here's a simple formula you can keep in mind. It will be somewhere over here. And also, don't pay attention to anyone who tells you otherwise. And for now, let's move on to my own strategy for using timeframes, and I will walk you through some chart example as well. So let's go.
Now that you understand why the order matters, this is a sequence I personally follow. It may vary slightly for different traders. For example, someone may use a 5-minute instead of 3-minute, but the principle stays the same. From my experience, the 3-minute time frame has helped me a lot more when it comes to precise entries. It gives me better timing and confirmation. And the idea is simple: context first, execution last. You build your understanding on the higher time frames, and then refine your entry on the lower ones. Now, let's move to the chart and walk through a real example step by step. So, let's pick a strong example here. I will scroll back a little. Let me double check. So, I'm just looking for something clear and structured, so it will be easier for you to understand. So, yeah. Let me... this one. And overall, this looks fine. Yeah. So, yeah, this works perfectly. And I think we should start our analysis. And first, we switch to the weekly time frame. And right away, you can see price is moving up. It takes this liquidity somewhere over here, another one above, and this liquidity over here. So that tells us that overall direction of the price is long. Now we move down to the daily time frame. And here we start looking for a potential zone of interest. So we're just starting to look for a potential zone of interest, or just the area where price might react. And honestly, guys, if we don't see a clean setup on the daily, we drop to the 4-hour time frame. So it's not a problem at all. So let's move to the 4-hour time frame. So we are here, and I think we should focus more on this area right now because we get more details. And actually, we can see how price takes local liquidity above. This one over here, another one over here, and we receive some reaction at this zone over here. So yeah, and the price continues in the long direction, right? And I will focus more right now on the recent price movements, and I will highlight this imbalance over here. So this could become our entry zone in future. Now, as we highlighted all our zones we are interested in, we can move to the 1-hour time frame. And here we can define our target more cleanly. So yeah, I'll focus again on recent price movements, and I will highlight actually another imbalance above. It will be our possible take profit level, and I'll also mark the liquidity pools above over here. They will serve us as future goals for the price. Yeah. So yeah, next we drop to the 15 minutes. And again, if there is no additional confirmation here, we continue lower for precise timing. And finally, we move to the 3-minute chart. And this is where we refine the entry. And actually, I will highlight this imbalance over here. And let me go back a little, somewhere over here. And let's watch for now what will happen. So yeah, let's stop here. And as you saw, I highlighted this imbalance, we gave the reaction, or confirmation kinda, and we are in role of traders right now. So we want to enter into our long position, and we'll enter into our trade somewhere over here. The stop goes slightly below 0.5 level of 4-hour imbalance, so 0.5 level, and take profit is set at the 1-hour imbalance somewhere over here, or just below the recent liquidity high. And guys, keep in mind, the higher you place your target, the lower the probability of hitting it. So we keep it realistic and structured. And let's see what will happen. I will make it look faster. Yeah, let's see, guys. How will... So, yeah. That's it, guys. Actually. The trade plays out, we take profit, and that's how the sequence works in practice.
Alright guys, that's the end of the video. I tried to explain everything in simple terms so anyone watching can understand clearly. If you enjoy this, hit the like button, it helps a lot. And yes, you saw it already, it's the first video, so be gentle. I am planning to post more trading content soon, explained in a simple and easy way, plus trade analysis. So if you don't want to miss anything, make sure to subscribe, and thanks for watching, and I'll see you in the next one.